Well, very good evening and welcome to Bloomberg Quint. Now, Indiabulls Housing Finance has reported a strong set of numbers in the July to September quarter with a net profit growth of 25%, beating consensus analyst estimates. Now, we're being joined by Mr. Ashwini Kumar Huda, the Deputy Managing Director at Indiabulls Housing Finance, to talk more about the quarter gone by. Mr. Huda, first of all, thank you very much for speaking with us. Mr. Huda, can you hear me? Yeah. Sir, just wanted to understand that despite the recent data which suggests a slowdown in the home loan growth, Indiabulls Housing Finance has managed to grow by as much as 33% in this quarter. So could you explain to us what the key drivers of this 33% loan book growth were, and if you could break up the growth segment-wise into housing finance, LAP and the corporate loans?
So the growth continues to be very robust in the home loan segment for us. Home loan is now 58% of our total loan book, where we continue to see around 35% of growth. This growth is largely coming from mass housing, affordable housing, which we call, where the average ticket size is around 24 lakh rupees. And these houses continue to sell very well despite the headwinds of GST and RERA. So in the suburbs of main metro cities of Mumbai and Delhi and pretty much most of the other cities, affordable housing where houses are priced between 30 and 60 lakhs have continued to perform well. As a result, companies like us have been able to grow our home loan book by 35% this year.
Mr. Huda, if you could throw some more light on the on-ground situation in the affordable housing loans, because real estate developers that we have spoken to recently tell us that there aren't as many projects taking off as they would have liked to. So if you could tell us how much of the fresh disbursements in this quarter was towards affordable housing loans or projects?
So almost 85% of disbursement were towards affordable housing projects. You must appreciate that the composition of buyer has undergone a huge change over the last few years. In affordable housing, most of the buyers are end users, and 95% of these buyers need a home loan. So while in the past there were a lot of investors in various real estate projects, they have deserted the space. As a result, while sales might be slower than the past because of recent demonetizations followed by RERA, I don't think so. GST has impacted affordable housing much, as most of the taxes pass through for affordable housing segment. So some bit of slowdown was visible in July and first week of August, but subsequently the pace has picked up. And we believe people are buying their first house as they compare the cost of rental, which is more like 3% yield, versus cost of buying a house, which after benefit from Pradhan Mantri Awas Yojana and the tax benefit on home loan, it comes to only 0.5% or lower. So clearly people are preferring buying versus leasing their properties, renting their property, and that is ensuring that there is a huge growth. The other factor contributing is that housing finance companies are gaining market share from banks. Banks have multiple products and they are distracted at present, which is leaving more and more market share for housing companies to grow much faster than the system as a whole.
Sure. But there's also a possibility that the real estate will fall under the GST purview. If that does happen, what would that mean for demand for loans, home loans?
No, so real estate is very much part of GST, but the important difference is GST impacts the premium side of real estate rather than the affordable housing, because in affordable housing, since the cost of input material is substantially high, let's say 80%, versus in a premium project where the construction cost is only 30%. In that case, your entire 12% GST rate gets absorbed in affordable housing project, whereas only 2-3% of your GST gets absorbed in a premium housing project. To that extent, affordable housing is not impacted by GST, as the entire tax is a pass-through, which developer is able to absorb, and customer does not have to pay anything.
All right. So then what does the sustainable loan growth number over the next few quarters look like, and how much of it would actually come from the affordable housing segment?
So our sense is that the Pradhan Mantri Awas Yojana subsidy benefits are a game changer. And while GST, RERA and demonetization are behind us, and more people are, more real estate developers have got around RERA registration, we believe supply as well as demand should remain very good going forward, and a momentum should emerge somewhere, 1 or 2 quarters down the line. For Indiabulls Housing, we have been growing at 30-35% for past few quarters because of the increase in the affordable housing demand. Last year data, even before Pradhan Mantri Awas Yojana got notified, National Housing Bank, our regulator, has published a report which has said loans below 25 lakhs have grown at 33% last year. So these numbers clearly indicate that there is a sustained momentum in loans below 25 lakhs, and we believe that momentum will only grow better and bigger in the coming year as Pradhan Mantri Awas Yojana benefits further, give it a push. And we believe we should continue to grow between 30 and 35% over the foreseeable future.
All right, that's fantastic. Also, what has driven the marginal improvement in the asset quality in this quarter? And if you could, share the gross NPA numbers in terms of the segments in LAP, the retail mortgage and corporate mortgage.
So clearly, our gross NPA at 0.78% are the lowest in last 5 years. The main reason for lower gross NPAs are that the home loan composition in the portfolio has gone up from 50% 2 years back to 58% now, and that is helping the NPA number. The NPA for home loan business is in a range of 25 to 30 basis point, whereas for loan against property it is around 0.5%. For corporate mortgages, the NPA would be around 1.5%.
All right. And what do you see as the biggest risk to this sub 0.8% sort of a gross NPA number?
So currently, we have not seen much risk emanating from, let's say, assets like loan against property or corporate loan mortgages. Home loans quality has only improved over last 20 years, year by year. So we are very confident on the home loan. Loan against property, because of GST, there were expectations of disruptions. But our customer segment, which is purely income appraisal based and an average ticket size of 75 lakhs, that segment continues to do well, and we have not seen any uptick in the risk in that segment. And in developer segment, we are largely present in lease rent discounting or lease rent discounting plus construction finance. So that segment also continues to perform well for us. So we are not seeing any headline. The only risk is if SMEs suffer more than expected because of GST, there might be a temporary asset pressure on that segment of business.
All right. And even as far as the interest rate spread is concerned, it has remained unchanged at 3.2% in this quarter. Do you see scope for a higher spread given the moderating cost of funds?
So absolutely. More importantly, our rating from Moody's associate ICRA has gone up to AAA. So we already had 2 AAA from CARE and Brickworks. With the international rating agencies company ICRA, our cost of fund has come down by 75 basis point on bond market in last 6 months. So we continue to increase our spread. In fact, our spread has increased by 5 basis points from 3.2% in last September same time to 3.25% this quarter. So we continue to benefit from the cost saving because of rating upgrade. But we are investing this cost saving more in increasing the composition of home loan in our business, and the asset mix should become more like 66% of home loan by 2020, and hence what we save on the spread, instead of using them to increase profit for a short term, we are using it to upgrade our balance sheet quality by doing more home loan business than loan against property or corporate mortgages.
Sure. Okay. There's also an increasing belief in the analyst community that there could be some rules as far as the LAP is concerned. Some rules by the National Housing Bank. After all the three credit rating agencies had sounded out some caution on the segment. So there could be some guidelines on how much loan to value ratio housing finance companies can lend, and analysts also expecting some stricter rules around refinancing. How real is the possibility of this happening? And if that does happen, what kind of impact could you see?
So regulation is always welcome. We are children of regulation. Regulation always help the market. For us, it should not have any impact. We are, in fact, pro keeping a cap on LTVs, as we were pioneers of this business, and we have done this business for last 12 years. Very safely, but a lot of new players came into this market around 2013-14, and some of them have been aggressive on the LTV front. So we believe that the market overall per se should gain in case some regulation come around those things. Indiabulls loan against property portfolio has very low LTV. At origination, our LTV, average LTV on our entire book is 49%. It's a monthly amortizing product, so on book basis it should be closer to 40%. And we operate very conservative as far as LTV or income appraisal methods are concerned for our loan against property business.
Sure. And your investment in Oak North Bank has become 3.8 times in little less than 2 years. So what are the plans with respect to Oak North Bank? Are you looking to increase or reducing your stake? And similarly, are you looking at any other strategic investment options as well?
So clearly, Oak North Bank was a unique opportunity where 5 bank licenses were given by Bank of England after 150 years. We were fortunate to participate in one of this license, Oak North Bank. That investment in less than 2 years has become 3.8 times. So we had invested $100 million, and now they've been valued by last round of funding at $380 million. So that's a gain of almost 2,000 crore rupees on that investment. But it was only for a strategic reason that we had entered into that investment. As a housing finance company, we do not have any plan to invest in unrelated fields. And so we will continue to direct our entire 100% of our capital towards home loan growth, which is growing very well for us at 30% plus. Oak North Bank clearly will go for an IPO very soon. They have been able to build very good business, and they have also mastered SME underwriting and have developed some financial technology platform around SME lending, which they would be also lending out to US banks and other banks in the world. So it's a bank which is at the cutting edge of technology, and we believe it will continue to do well. But we have no plans of increasing our stake in the bank or putting investment in any other business apart from only housing finance business.
All right, Mr. Huda, just the last question before we can let you go is, are there any timelines for the IPO of Oak North Bank?
So I do not have those timelines. You understand, these things can take time. My own sense will be the time frame should be 18 to 24 months, but I have no access to any definite timelines on their IPO.
Sure, Mr. Huda, thank you so much for speaking with Bloomberg Quint. And that was Mr. Ashwini Kumar Huda, the Deputy Managing Director at Indiabulls Housing Finance, very confident that the 30 to 35% sort of a loan book growth will continue in the foreseeable future. The management does not see stress on asset quality, but unless, of course, the GST pain continues for longer than estimated for the SME sector. With a very strong set of numbers coming in, and that was the management of Indiabulls Housing Finance. Thank you for watching.